Boom, we are alive, ladies and gentlemen. We're going to keep it simple today. We're going to be taking a look at Bitcoin, some of the details that came out about the Mt. Gox distribution, a really quick look at the Ethereum ETFs, the S&P 500, the dollar, and the VIX, because I think all these tell us a wonderful story. So right off the bat, we're diving in. Last week, we saw a very strong buy signal in the hash ribbons, which in the past has generally indicated a switch of market sentiment. Not always, but quite often. From there, a huge amount of demand over top of the selling pressure came in as well. This is amidst the Mt. Gox selling, the German treasury selling, and the miners taking profits. So a significant amount of the big sellers had already taken a lot of that risk off of the table, that's super important to remember. It'll be very helpful for us in this next step. Also here we've been following this, what appears to be a reaccumulation range. I would like to see a test of the 200 simple day moving average, which is approximately around 61,000. So in our previous videos, we had looked here in on the 6 hour at the likelihood of this horizontal accumulation range being the most important indicator of where we are in that sentiment. Currently, at the moment, the stochastic RSI here is totally oversold. So we're going to be moving into bullish territory most likely soon. And with this horizontal range that's taking place in the middle of the box of this larger trading range and some of the data I'm about to show next, again, I think we're still bullish. Again, there's reason to believe we could go down. There's always, this is a game of probabilities more than anything. So we have to remember that in a game of probabilities, if I flip a coin so many times, I'm going to get X or Y, but sometimes you might get head 5 times in a row. That actually sounds like a great day for most people. Might get heads 5 times in a row. Anyways, I almost threw myself totally off track there with that previous thought. But what I wanted to do was take a look at some of this Glassnode data. So this is one of the Glassnode charts I like quite a bit. This shows what they call the realized cap hodl waves. This shows the kind of the disparity between long-term holders and short-term holders. Long-term holders can usually be considered the whales in the ecosystem, and short-term holders are people that are usually buying off the price moving up and want to capture some of that on the shorter term. Now, over here, as we zoom in on this particular portion of the market, what we can see are these different colors represent how long people have been holding. Now, in the previous bull market peak, you can see there's a very thin area highlighted here that really has basically all the long, short, and medium-term holders very, very thin. Where here, you have a pretty big area of both long and medium-term holders within this gap. So even though we've kind of turned up, and there's a few reasons to go over again why that might be the case, you have distribution of Mt. Gox. I was hanging out with a good friend of mine this last week who got their Bitcoins for the first time, and I don't know however many years it's been since the Mt. Gox debacle took place. So seeing that they are still largely holders throughout this change, I think, is important. But again, what it signals is usually at the very top of the market, what you see, again, if we go back to the previous top of 2018, look how thin this long-term holder spread is. It's so thin. There's basically nothing down here within this data. And again, when we zoom out, we can see that as we go to the top of the market, you really start to see a thinning out of the long-term holders. And that's not what we see here. Here we see a massive chunk of both long and medium-term holders, and that's what's important to recognize. It's important to recognize here that this massive chunk of medium and long-term holders here likely signals that they're not selling and they're still accumulating. There's a few other data pieces that we'll go over. The next one was that I like to take a look at here is just there seems to be a lot of liquidation that's going to take place at 72,000. The market's going to try to get rid of that. They want to get rid of any long or short positions as quickly as possible. Those represent people who have basically borrowed money to buy Bitcoin or sell Bitcoin on either side of the trade effectively. So it's important to remember that we're so close to that $72,000 mark, and you're talking about $18 billion of leverage, that once that gets wiped out, we'll probably jump pretty damn high, maybe upwards of $85,000 in a very short period of time. So this horizontal trading range that we've been following here becomes very important, because that move from where within the box around the $61,000, the 200-day simple moving average, up to 85,000 is not very far. So it's only 19 to 25% basic, more or less, give or take some percentage points there. So to me, what it looks like is we've seen a spring, and we're seeing the final reaccumulation of the test, which with the bear claw again on the daily where we're at right now, we would love to see a retest of the 200 simple day moving average. But Bitcoin in its bullish momentum rarely gives us those peak out bottoms. You know, that we've had Bitcoin's price already down at 55,000. And now that the Mt. Gox tokens have already been distributed, a lot of the fear that's been residing in the market of what's going to happen to that billions of dollars has basically been removed. So there's lots of reason to just ignore that, and we can see all green. Now, before we jump into too much further, I wanted to point out that the spot Ethereum ETFs for the first time outpaced the Bitcoin ETF. So there's significant interest in Ethereum. Now, it didn't start off that way, but as you can see, you're talking about hundreds of millions of dollars of accumulation in the spot ETF. Let's see, on the 23rd here, 1.1 billion, 772 million on the 29th. On the 30th, 557 million. So significant increases in the Ethereum ETF holds. Now, a lot of people didn't expect that. The fact that Ethereum today outpaced the Bitcoin ETF accumulation chart, I think is an important one to note. So just for fun, we'll take a look. Sorry, I got one more chart I wanted to open up here. Yes. The fear and greed index also as well is not super overheated. We're currently at 61. Generally, anything over above 80 is a great place to start selling, and anything above 30 is a great place to start buying. It's usually one of the simpler charts to kind of focus on is where are people selling, or what's the fear in the market. Again, currently we are not in super overheated greed areas, so I think we're seeing accumulation. That's what it looks like. The probability of it being accumulation now is massively increasing, and I suspect that it's going to continue that way. There's always some type of black swan event, but we can usually see that coming a little bit ahead of time, and I don't think that's what we're seeing right now, and I'm going to go over why that is. For those of you that have followed the channel for a long time, the volatility index is something that we keep a really close eye on, and as you can tell, it's not a perfect downtrend, but since around 2022, the end of the mask mandates effectively, and that nice scammer on, we've been trending downwards, and we've actually hit some pretty frequent lows in the volatility index, and now we're pointing down. So we've hit the top of the trend range, we're pointing down. We're probably going to go down into the summertime. A lot of the time summer people start to calm down, they're taking vacations. Just in general, if you think about it too, there's a huge amount of data that proves that the increase in vitamin D makes people happier and healthier. So as we go into the thick of summer here into August, it usually the volatility index starts to drop because people are calmer and happier throughout most of the northern high volume trading hemispheres, from Canada, the United States, London. You've got a few others there as well, Hong Kong, parts of China. So I suspect that that's going to continue to the downside. And here today, the S&P 500 has actually jumped up a few percent. So macro data right now, like I said before, is I figured we were pretty close to the bottom for the S&P 500 at the current moment. I think we're going to move up and test this top. I think before the end of the market cycle makes itself clear, we're going to get a horizontal trading range that takes place right here. So let's go in. We'll get rid of the bear claw for a second. I've been talking about this area for some months now. The likelihood that we're going to move into the 571 mark for the S&P 500, and the likelihood that we're going to break that due to money printing. Inflation has actually come down dramatically as well too, but we're going to leave that for our next video. More importantly, what I wanted to focus on was this horizontal trend line and the parallel channel that I think is going to build right here. So ultimately, before the end of this, whether we get to find out or not, because this is, again, a game of probabilities here, I have suspected that in this downside, we're going to see a horizontal trading range that does something like this, and then probably breaks out to the upside. I think a massive, and the timing on this is I probably drew that incorrectly. Let's be a bit what I would think is a bit closer to the actual time. I think we're going to have a massive amount of volatility that comes into the November elections, which is probably where our spring will be. I think it's going to fake a lot of people in the market out, but they're talking about UBI already, and they are very serious about it. Although I don't think UBI is going to make people richer, for the intermediate time, it's going to give the heroin addicts what they want. They're going to inject that monetary heroin. People are going to feel like the stimulation is helping them. They're going to be able to reel in inflation much easier than they ever have before because of the excess deaths that we've been going over for so long. The fertility rates right now are just totally fucked. If you go to my Twitter page, I might have to scroll through a bit. I'll try to reshare the data. But the fertility rates are like at a 40 sigma event in terms of the increase in miscarriages and stillbirths, which is just a stunning thing to think about. So in our history, on most of this, the population has always been growing. Up until recently, the population has been in a very, very steady increase. And this will be the first time in my lifetime and many lifetimes where that has stopped and started to turn around. And the deflationary aspect of that is unimaginable. So when they're talking about, oh, inflation's back at 2%, this is the first time they've ever been able to stop a recession without, or curb inflation without starting a recession. This is the reason why, I think this is the reason why, is that effectively they were able to curb a big part of what we thought was going to happen with hyperinflation through excess deaths and a total loss of the growth of fertility rates. Now, again, I'm not a doctor, I'm not a scientist. I just like data, and the data is super fucking bad. You can find it in many places. I shared in the private group down below. And remember, the sickness of the early investor comes from over trading and just not having the support group. So the cure to that you can find by going to arcanebear.com/private, or the links down below. Join our private group. It's a 30-day trial. So if for some reason you're unhappy, we'll just give you an instant refund, no questions asked. So why not take the risk? Sign up. We're going to be sharing that data again. All of that fertility and excess death data is going to be coming out in the next 2 weeks newsletters, because I think this is super important. And just to kind of finalize here, I think that the Federal Reserve is going to start to cut rates. That 2% mark has already been hit. So just we'll kind of roll into that now. I'm just going to read a quick article before we end this. The U.S. economy is carefully treading needle as a very rare outcome known as a soft landing has occurred, a situation in which inflation slows to the Federal Reserve's 2% target. So we have now reached that 2% target. And again, I think the reason why we've been able to have the first soft landing ever is because if you print a bunch of fucking money and there's less people to spend it, you're not going to have inflation. You're going to have a massive deflationary effect that comes into the market. And I think they're going to whipsaw into negative inflationary rates, and they're going to turn on that printing press like we have never seen before. And it is going to drive all asset prices up and away. I think everyone who's calling for a stock market crash is not seeing the bigger picture here. I don't think most people recognize how bad the excess deaths are, or the miscarriage and stillbirth rate increase, which is just a stunning data point to try to take in. So, because we would probably get banned and demonetized and YouTube likes to censor us, please remember to subscribe, like the channel, and join our private newsletter where we can actually share all that data freely, because I can't share it here without getting kicked off the motherfucking internet. Stay with the Arcane Bear. We'll see you guys again in the next episode.